Okay, everyone, thank you for tuning in to this afternoon's live session. It is 3:30 p.m., 12th of June 2024. So, beginning on the dollar index, what price has done since our last session just over an hour and a half ago? Price has come down into this daily demand area, which we had marked on. Now, one of two things could happen from here. Number one being we could move away from here to continue bullish, or number two, we could continue down, take out this low, and mitigate this 8-hour imbalance. What we do from there, we don't know. But that's one of two things that could happen from where we are right now. What would I prefer to happen based on technicals? Although I don't think we are going to get it just because of that strong candle down. I would like to see a continuation to take that high out. But like I said, the aggressiveness on this 4-hour candle, if it was to turn around, it would need to potentially consolidate for a little while to then find its feet if it did want to do that. So obviously this candle closes in 28 minutes, this 4-hour candle. So who knows, potentially by the end of this week we will know what's going to happen. Either that low is going to be taken, or we might even consolidate within here for a couple of days before we do anything. If we do kind of stall at this area, then we could see a move away. However, this could still be on the cards, not only because it's an 8-hour imbalance, but because it's also still within a discount of this entire range. So from this low to that high, that would still be within a discount. So we could still move away from there. All right. So that's what I'm looking at on the dollar index. Let's move on to pound yen. So on pound yen, we can see that we've wicked into this daily resistance, this daily high right there. So we've wicked into it once. Today is the second time, so number two. We've got 6.5 hours left of today's candle until it closes. If it closes something like this, I would expect to see a pullback because of the rejection of this area. Number one, and number two is the fact that I'd like to see a deeper retracement from this low to this high. We've got that daily imbalance there as well, and that could be the catalyst to pull price back down. Now, it doesn't mean to say that it will do that, because on the 4-hour time frame we've also broken this 4-hour high right there. So we could even pull the Fibonacci from this low to that high as well. That would be completely valid to do so. And look what we have within that discount with liquidity resting above. We've got that 4-hour imbalance right there. Okay. A 4-hour imbalance. Let me just take this off these time frames. So that's pretty nice to see. Okay, so for the meantime, I'm just going to sit back and let this develop. Translating that over to the 1 hour. On the 1 hour time frame, you can see strong push down off the back of this high. So we've got a 3-pin pattern there, and what we could potentially be printing in 25 minutes is this 1 hour bearish imbalance. So with that in mind, if we can get a retest of this, we could go short into there. However, at the moment, there's still not been any bearish structure breaks. Everything is still bullish. Everything's putting in higher highs. So for now, it's like I've just said, it might just be a case of waiting for price to develop and waiting for price to come to us rather than chasing price. Okay, so that's pretty much it for GJ. Okay, let's look at GU continuing to go up. So what we've ran into as well currently is this. So we might see some issues here. This is a daily resistance area, but I do believe that high is going to be taken. We've got a daily imbalance right there, and we've got a monthly imbalance there as well, with liquidity resting below, because that is a prominent high right there that was printed in July 2023, so pretty much a year ago. So, you know, we might even head there again this July. There is that potential. So that's what I'm looking for on GU. Other than that, what I'd like to see is a pullback for me to get involved in this. But for now, I'm just going to let it do its thing. Okay. Euro dollar continuing to shoot to the upside. Coming out of that area right there. Okay, on the 4-hour time frame, just to recap, we said about this break of structure on the 4-hour, but the higher time frame is always going to outweigh the lower time frame. So what I mean by that is, number one, we're coming out of yearly support. So this is a yearly area right now, this thick red line right there. We've tapped into yearly support, reacted, came back down, reacted off of this daily imbalance and moved away. We've broken this high right here. We've now come into discount prices and we've reacted from a daily support like so. So those two bodies bringing it through, you can see how price has respected that area. And you can see here as well, this sort of technique, I guess you could call it, does work really well. It's basically support and resistance. We're looking at the bodies of the candles, bringing that through all the way to the right hand side. Price has come into that and it actually gave a 4-hour 3-pin pattern right there. Just there, look. Okay, 1, 2, 3 coming out of support. Inside a discount, target the high. That's a simple support and resistance system, really, coupled with Fibonacci and 3-pin patterns. Okay, that's pretty much it for euro dollar. What I want to do is go over silver, because I want to keep a close eye on silver, because as we've spoken about before, excuse me, it does move quite nicely and it respects areas really well. So what I'm going to do, I'm going to add a section in here. Silver. Okay, let's delete these old drawings. Okay, so from a 12-month perspective, let's have a look. So from a yearly standpoint, in terms of support and resistance, I can see that price has come back into a yearly resistance. Okay, and I'm actually going to keep that a bit thicker, to be honest. Okay, yearly resistance, I'm just going to put there. Yearly. How did I word it on this one? I like to do it all the same. Yearly support. Excuse me. So we've got yearly resistance right there. I'm going to copy and paste that and bring that down to here, because price wicked into this yearly support. Okay, we've got, excuse me, we've got the highest high of all time, which is up here, which is $49.80, 81 cents. I'm just going to leave that for a moment. Let's go. Actually, something else to bear in mind as well, which is very, very important, is the fact that we've come out of this yearly imbalance bullish. Yeah, so 12-month imbalance right there. Prices come into it. So 1, 2, third year. We move away. Let's go down one more time frame. Let's look at the monthly. Okay, so from a monthly perspective, what I'm looking at right here is the fact that we've closed above this high on a monthly. Okay, on the monthly time frame. So if I zoom in, you can see that. So what does that mean? Well, that means that this is now valid structure because we've had a low, a high, higher low, higher high. So therefore, this is now the new range from this low to that high. So what I'm going to do, I'm going to highlight the structure points with a highlighter tool, like so. Okay, that's obviously the high, so I'm going to bring my Fibonacci from the low to the high right there. Okay, I'm going to just adjust this one moment. Actually, I can get rid of that, to be honest, because I know that it's closed above there. So monthly we're bullish, 12-month we're bullish. So what we want to be doing is waiting for pullbacks. So that's the range there. So from the low to the high. What I can see there with ease and with accuracy as well is that monthly imbalance right there. Why that one and not that one? Well, because this one is in a discount. So I would prefer to see that if I wanted to buy silver. Okay. So understanding that, and also understanding the fact that we are just sort of in the region of yearly resistance, this could be a great catalyst for a pullback, which would also make sense if the dollar continues bullish, because obviously this is traded against the dollar, okay, XAG USD, okay, so silver against the dollar. So with the dollar potentially going higher, this could bring this down. And if it does come down, that would be a great opportunity to buy. Let's go on to the weekly. Okay, so on the weekly, what I want to do is take this off of the weekly because I don't need to see that. Okay, so obviously this is our quote ceiling or resistance, whatever word you want to put onto that. As we've ran into there, you can see price didn't want to be up there for very long. So we've gone into that bearish candle. I mean, that candle did close bullish, but that's a very, very bearish looking candle. I mean, the size of that wick to the upside. We've obviously reacted from that area. We didn't want to be up there for very long, and then we closed that back down here. The following week came back up, retested these bodies of this candle. This is why the bodies of the candles are very, very important. Retested that area and then came back down here. Now, the next area that we want to be breaking, if we do want to come down into here, is this area right there. Okay, why? Because that's the next support level, if you like. As long as we remain above here, then they'll be looking at that high to potentially go once more. So what I'm going to do, I'm going to take that off. Okay, just leave that on there. What we also have is this weekly imbalance. We are currently sat within a weekly imbalance. I'm aware of that as well. Like so. But we also have that right there, don't we? Okay. So let's go down to the daily time frame, because on the daily time frame, this is what we're reacting out of currently, is this daily imbalance right there. Okay, so I'm just going to put D there. This is weak. W, W. Okay, just keeping things nice and simple. So we're reacting from this. Coming out of that high there, you can see price has started to put in bearish structure. Okay, very, very plain and simple. High, low, lower high, lower low, lower high, lower low. But the fact that prices came and stalled back into here, what we can now do is go down to the 4 hour, because I just want to see if there's anything to the left that price came into that was fresh. Okay, so we did have that area right there. Let me just go back to the crosshair. Okay, so we did have that right there. This is the 4 hour imbalance right here. Let me just put 4H. So what we'd then need to see is a 15-minute break. But having said that, the fact that that was a imbalance that wasn't fresh, let's just take that off. So the daily, what we'd need to see is a 30-minute break right here. Okay, so that would be the break just there. Okay, so a 30-minute break. And then ideally we'd want to see price come back into this. Okay, this is our 30-minute demand area. So what we're going to do, we're going to put an alert on here. And wait for that. Now, where we could potentially run into, if we do come into here and we get a nice entry to take it long, what we could run into on a 4 hour perspective, we just take that off the 4 hour, just one moment. Again, just keeping it nice and clean. I'm very particular with my charts. I don't like it too messy. What we could run into is this. So that could be a good area to take potential profits if we do come back down into that 30-minute demand that we just spoke about. And also, one thing to note is this is all trendline liquidity. This is all liquidity right here. Okay. So if we are going to go bullish, we're going to take that high anyway, but this could be a good area to manage the trade. I'm not quite sure why it's not there. There you go. This could be a good area to manage the trade. IE, sorry, taking some profits off the table, closing partials, that sort of thing. Okay, so that's what I'm looking at on silver. That's what I'm looking at on silver. On the weekly, just to recap, let's take that off the weekly. So we've ran into that area, we've come down, we've mitigated this weekly imbalance. On the daily, we've tapped into that daily imbalance as well. Let me just take that off the daily. We've printed 4 hour bearish structure. But overall, we're still bullish. Okay, so let's just mark on the structure points. So from here, so we've got the high, the low, lower high, lower low. The reason why that's not the lower low is price didn't come into a premium before making a new low. So this is the lower low. Price came into a premium, made a new low. So this is the lower low here. So therefore, on a 4 hour, this is the new range from a bearish standpoint. Okay, but like I said, overall we are bullish anyway. So these highs could be next on the cards. It would be nice to get a retest into here. Okay. So that's pretty much it for silver. Let's look at gold together. Let's look at gold. Again, I'm going to use Owanda's chart just because I prefer it. If there's drawings on here, I'm going to delete everything and we'll start again. Yeah. Okay, get rid of everything. So, 12 month. Obviously bullish. Okay. First and foremost, what we can see is price came out of this yearly imbalance like so. Down into the monthly. Price had that to the upside. I just want to see if that came into a discount. Yes, it did. Okay. So from a monthly standpoint, what I'm going to do, I'm going to count this as the monthly structure points. So from this low to that high, high, low, right there. Why am I doing that? Because that leg to the upside then achieved a discount before making a higher high. So that to me is valid structure. Right, so this is now the new leg. So from this low to wherever the high decides to print, it might be there. We don't know. It could go higher, at which point I'll just drag that higher. Let's just say it is there. There isn't anything too obvious for me on the monthly. What I can just outline and sort of highlight is the fact that this monthly resistance, these two bodies that were printed in July 2020 and August 2020, bringing that through, we can call that monthly resistance. Price wicked into it, came down, price wicked into it once more, then price closed above it, indicating price wants to go higher. What did price do? Took a few months of pullback, but then it did continue higher. So what I can now do is I can put that across there because this is now valid as well. If price decides to come down lower, because we've got two monthly bodies there. We've also got two monthly bodies resting below there as well. But we'll cross that bridge when we come to it. We've got to reach those first. So that's pretty much it from a monthly standpoint. We do have a monthly imbalance right there. But again, we'll cross that bridge if and when we decide to come to it. We've got to reach down here first. From a weekly perspective, what we can see clear as day is a few imbalances. We can see this one down here with liquidity resting above. Okay, meaning this. Meaning that we've got a weekly imbalance right there as well. Take these off the monthly. Okay, and then from a support and resistance sort of narrative, what we've done is close below here on a weekly. So this was the most recent weekly support handle. Price comes up, price comes down, closed below it from a weekly perspective. Okay. Also, if we remember what I was saying about on gold is the fact that we printed 4-hour bearish structure. Okay, first of all, let's just go into the daily just to highlight some areas. We came into that daily imbalance clear as day. Very, very nicely, in fact. Which was within a premium of the first bearish 4-hour leg, which I'll explain in a moment. And now price is in its second bearish 4-hour leg. Okay, so that's the daily. There isn't anything else that I'd want to discuss on the daily other than the fact that we have that daily support, but the fact that we've closed below weekly support is enough for me to say that this could potentially be in for a reversal, or at least a pullback rather, down into here, potentially down into 2080. Go into the 4 hour time frame. I'm just going to put that on the 4 hour. Into the 4 hour time frame. Let's highlight the moment in which price broke 4 hour bearish structure. So this was bullish structure from the low, high, higher low. Again, these are all points in which price comes into a discount or further. This is why they're valid structure points. Higher high, and then price did what? Closed below that low right there. So that was the first sign that price wanted to go bearish. The first sign. Okay, let's just highlight this. Four-hour break. Then price decides to continue coming down, and the reason why I'm not marking that as the structure point low is because price didn't come into a premium before making a new low. Price, however, from here did achieve a premium before making a new low. Therefore, that is the structure point. That's the lower high. This is the lower low. Okay, so this is the second 4 hour leg. So this is the first one into premium. This is the second one. Okay, so theoretically that low could be vulnerable right here. Theoretically, okay. What we do have, so on a daily, we do have that imbalance right there. We do have a daily supply as well. So the last bullish candle before that bearish move. On a 4 hour time frame, we've also got a very nice imbalance right there. I'm just mindful of the fact that it's nearly 4 p.m. That's fine. Getting through quite a bit of analysis today, which is good. This is a 4 hour imbalance. Where is it? Well, it's within a premium, isn't it, of this 4 hour leg, bearish leg. So that could be a great area to look for shorts. It really, really could. The only thing I don't like about this is the fact that that low has remained respected. But it's the fact that that's closed below there on a weekly that I don't like, the bullish side of things. Although we are still within this weekly imbalance. That's something to keep in mind as well. We're still within this. Like I said, the fact that that low has remained respected, this low right here, this could just be a higher low, simply put, before we continue higher. So I want to see what we do at this 4 hour imbalance. I want to see if this high is respected or disrespected. Whatever happens here, if this closes above here, then more than likely that's going to be taken as well. However, this also looks like a head and shoulders pattern. It's not something that I trade at all, to be honest, but that is what it's looking like it could be. So we'll have to see what happens. Okay, so and also it's the fact that silver has come into that area as well, basically ready to potentially go to the upside. But silver has also printed the 4 hour bearish structure as well, which is interesting. So if we just compare the price action, so this is the 4 hour time frame on silver. So from basically the start of May is when we started to continue up. Let's have a look at gold. Again, the start of May there, look, it's when we continued up. What about when we came down? So that was the 12th of April before we started to come down. Let's have a look at silver. Again, the 12th of April there, look, looking at the bottom before we started to come down. What about this rally here? This rally started on the 27th of March on silver right here. Let's have a look at gold. 27th of March was 27th of March right here as well before we rallied. So they are quite closely correlated, just by that fact. We can even go higher and look at the daily time frame. So the 14th of Feb, that low was printed on gold before we continued massively bullish. So Valentine's Day, let's have a look at this. So 14th of Feb, where were we? Again, down there, look, before we continued up. So yeah, very, very interesting. Very, very interesting. So that brings this live session to an end. Just want to say thank you for everyone that tuned in. If you did tune in, please feel free to drop some feedback in the Discord group. I'm not entirely sure if anyone's watching, but if you are, hope that brought value to yourself and to your trading, and I'll catch you in tomorrow's live sessions. Okay, so it'll be 1:30 p.m. again for myself and 3:30 p.m. and then Henry will cover the live sessions in the morning. If that does change, we'll let you know. So thank you once again for watching. Take care, trade safe, and I'll see you tomorrow. Thanks, guys.